So I think everyone really brought a mix of expertise and know-how to the table that really complemented itself. Listing the partners one by one, if you look at Nomura, Nomura is over a 100-year-old financial service institution with over 28 offices regulated in multiple jurisdictions. So it's really bread and butter financial services with an institutional DNA. Nomura has a very innovative culture, meaning that the business is always looking to disrupt itself before a third-party fintech vendors or new market entrants would disrupt the traditional business model. And so Nomura is always looking at new technologies, emerging technologies, and how these would impact their existing business model. Around 2015, 2016, there was a lot of discussions around the potential of blockchain technologies, not for cryptocurrencies, but really to leverage the technology stack to create a more efficient financial market infrastructure. And so early on, I think in 2015, Nomura already invested in a private blockchain company called R3, looking at how you could leverage blockchain technologies to make, on one side, existing business models more efficient, but on the other side, also create new business models. And so to my point earlier, Nomura was quite active and quite an early adopter of these new technologies, really from an R&D perspective, looking at how these technologies over the long term could impact its existing business models. Since then, we've done a lot of research and we must continue to do a lot of research around how can you leverage blockchain for anything around currencies, so looking at stablecoins, anything around securities, around security tokens and bonds on a blockchain. So really looking at having a very long-term view as to how that new tech stack can impact its business models and how to do it in a regulated and compliant way, and how to be able to service Nomura's client base or continue servicing the client base with what they require in the market. CoinShares was and still is the leading digital asset fund manager. CoinShares, prior to being called CoinShares, was called Global Advisors. They, in 2014, launched the first regulated Bitcoin fund. So they really understood, on one side, how to deal with digital assets in a more regulated and compliant way, and not purely on a retail investor base, but really how to scale that business and how the next wave of institutional participation would impact the market. They obviously had a number of funds outstanding, as well as exchange-traded products, and so they understood the need for regulated market infrastructure to really help scale the market overall. And they really provided the use case for custody as an existing challenge in the market for a player like them, that then would even become a bigger requirement for more larger traditional financial institutions like Nomura. And Ledger started as a technology company. Initially, they only created Ledger Nanos, which are USB stick-like hardware wallets to store cryptocurrencies in a secure way. And since then, they really moved ahead and also created the Ledger Enterprise part of the business, focusing on institutional-grade digital assets, security, and hardware that would really meet the requirements of institutional investors. We've been really looking at more of how the technology stack and security overall evolves. And around 2018, we got comfortable with the Ledger Vault solution as a potential underlying infrastructure for Komaino's security system to really be able to, on the one side, custody and also manage digital assets at scale for institutions. And so it was really a good complementary joint venture whereby every partner would bring their expertise to the table, and together we would build Komaino as the leading institutional grade digital asset custody company.